Hi there, good morning. You're watching Market Cafe on ET Now. It's me, Mishra. It's a Monday morning. We wouldn't say it's a bright Monday morning because here in Mumbai, the skies have been grey this morning. But, well, this is a show where we are going to be taking you through everything that happened post-market back home on Friday, as well as all the global action over the course of the week and all the important stories, earnings, everything to know that happened over the course of the weekend. Let's bring you up to speed on that front and take a look at what's been happening globally, and let's take a look at what happened with the US market first. And before we talk about that, let's take a look at what the US futures are up to right now. US stock futures look little changed, and they were a little changed last night as well, as investors are tracking the latest developments on trade, tariffs, and we're of course awaiting the start of the big tech earnings this week. Trade was once again in focus as the White House reiterated its position on tariffs. Now, while you have all the futures that are mildly in the green right now, it's going to be important to see how Wall Street opens later in the day, because Wall Street is coming off a winning week for the S&P 500 and Nasdaq, both of which continue to record all-time highs. The S&P 500 ended last week higher by about 0.6%, while the Nasdaq climbed 1.5%. The Dow ended the week slightly lower, but well, that's the way the US markets have ended last week, and these moves come on the heels of a solid start to the earnings season. Of the 59 S&P 500 companies that have reported their earnings so far, more than 86% have topped expectations. So far, earnings on Wall Street seem to be very strong. On the economic front, the June reading for leading indicators, which are predictive metrics for the overall market and economy, is scheduled for release this morning, and of course this morning US time. If we take a look at some macros, then US yields have fallen to 4.44% amid strong macro data. The macro also is supported for the US. Remember, last week we had PPI, WPI, CPI, all of these numbers come out for the US, and they have all done rather in line or better versus estimates. The dollar fell on Friday, still gained for the second consecutive weeks. Over the course of the week, the dollar saw some strength, but Friday seemed to be slightly weak for the dollar. So that is what the US market has done. But we also have my colleague Kanishka, who's joining us on board this morning to take a look at what the crude markets have done over the course of the weekend. Kanishka, morning. Take it away.
Good morning, Snehi. Well, if you take a look at the crude market, now crude oil futures, they've held largely steady around that $69.5 per barrel mark. As on Friday, mixed US economic news that offset worries that the European Union's latest sanctions against Russia for its war in Ukraine could reduce oil supplies. Now, that kept both crude benchmarks on track to lose about 1% last week. However, in Europe, the EU reached an agreement on the 18th about a sanctions package against Russia over its war in Ukraine, which includes measures aimed at dealing further blows to Russia's oil and energy industry. So that's something that we will be watching out for. Now, the EU will set a moving price cap on Russian crude at 15% below its average market price. Now, EU diplomats have said this, and they say that this is aimed at improving on a largely ineffective $60 cap that the group of 7 major economies have tried to impose since December 2022. The EU will also no longer import any petroleum products made from Russian that's how the EU has said that it will no longer import any petroleum products made from Russian crude, though the ban is not going to apply to imports from Norway, Britain, and the US, Canada, Switzerland, and that's exactly what EU diplomats have said, and that's what we're tracking when it comes to the crude market. So yeah, that's how the commodity market is looking right now. Snehi, over to you.
Absolutely, Kanishka. Lots to track when it comes to the crude market. Of course, lots of geopolitical tension also building up when it comes to the crude prices. But let's move away from that and once again focus back on equities and take a look at how our markets have closed on Friday, as well as over the course of last week. Now, remember, Friday was a slightly morose trading session for us, if you could call it that. Nifty ended lower by 0.6%. Sensex also similar moves, and Nifty Bank took a steeper knock of 1%. You had results weighing from Axis Bank, so that's the reason why the market was largely in the red, along with Nifty Bank, but also Wipro managed to keep the market afloat to whatever little extent. But if you take a look at how the markets have done over the course of last week, you had Nifty Bank that continued to decline for the third week. Mid-cap and small-cap indices, they outperformed the Nifty 50, and that trend really continues for our markets. The real estate sector was the top sectoral gainer, about 3 to 4% uptick is what we've seen. PSU banks were up 2% over the course of last week. Autos have snapped their 2-week losing streak, and FMCG advanced for the second consecutive week. What did well over the course of last week was metal and pharma. They managed to close in the green. Energy snapped its 2-week losing streak as well, so that was good. However, what was largely marred in last week's trading session, given we had a lot of bellwethers from this sector reporting their earnings, especially from the Nifty 50 group, that was the IT sector, that was the top sectoral loser. So, well, that's how the market texture has been over the course of last week. You have names like Hero Moto, M&M, Bajaj Auto, Wipro that have been top gainers. On the flip side, names like Axis Bank, HCL Tech, BEL and Kotak Bank have been the top losers. So that's the way the market has shaped up over the course of last week, Kanishka.
That's right. So now that we're talking about the domestic market, let's also shift focus to the F&O segment and see how that is looking. Sharath, how is the F&O snapshot looking this morning? Good morning to you.
Last Friday, the correction did continue when it comes to the earnings, and volatility was there for both Nifty and Nifty Bank indices. And of course, over the weekend, important earnings have been also announced. The PCR numbers, be it for Nifty Bank, it's near comfortable levels, a bit oversold when it comes for Nifty, and Nifty Bank, it is still at comfortable levels. Looking at Nifty, long unwinding is happening, and a change is a very minimal change of open interest. Now, the most active call writing, the level is at 25,000 for Nifty, and for put buying also the level remains the same. The highest open interest strike price for the weekly expiry put levels is coming at 24,900, while the call levels come in at 25,200. For Nifty Bank, short build-up is there, and the open interest change is after almost 5% The highest open interest strike price is a put 56,000, call coming in at 57,000. And if you look at the FI long positioning, that is down more than 30% in last 7 sessions. It's just 15% as compared to 16.71% last Thursday. DI long participation, that has also moderated a bit and has fallen down from 69% to 68%, while the retail, that has actually jumped up in terms of the overall long positions. 4 stocks in FNO band: Angel One, Hind Copper, RBL Bank and Bandhan Bank as well.
Okay, Sharath, thanks for taking us through all of those updates on the world of on the FNO front. But let's take a look at all the important global cues to watch out for this morning, because not much macroeconomic action is expected back home. But from China, you have loan prime rates numbers that are going to be coming today, and Japan, the markets are going to be closed on account of their Marine Day holiday. But let's shift focus back home and talk about all the earnings that are going to be in focus. From the Nifty 50 pack, you have 2 stocks that will be coming out with their earnings today. 2 companies, that's Ultratech Cement and Eternal, that was erstwhile Zomato. So watch out for both of these Nifty majors in today's trading session. Other than this, you also have a whole host of earnings like Havells, Mahindra Logistics, PNB Housing, Oberoi Realty, IDBI Bank. So all eyes are going to be on these stocks as well. In terms of their annual general meetings, today you have Persistent System and Mahindra Logistics. The board will be meeting for their AGM. So watch out for any important announcement, if at all, from these AGMs. In terms of some corporate action and board meetings to track this morning, we are going to be watching out for BEML, because the board is going to be mulling a stock split today. So important announcement on that front. And you also have Equitas Small Finance Bank that's going to be mulling fundraising. Also, today is going to be the last day to buy shares of Pidilite, Sonata Software, Route Mobile to be eligible for their dividend. The record date for the same is tomorrow. So, well, that's all the stocks that are going to be in focus today. In terms of other events, we're going to have some important commentary coming in from the Fed Chair Jerome Powell today, Vice Fed Chancellor of Supervision, that's Michelle Bowman, along with OpenAI CEO Sam Altman. So these are going to be important commentaries to track today. But well, yes, that's all to watch out for in today's trade, back home as well as globally.
All right, so those are all the cues that we are watching out for back home as well as globally. But let's also take a look at all the stocks that are going to be buzzing in today's trade. We have Sharath, Varun and Srishti and Rabinder joining us now to take us through all the stocks that are likely to buzz in today's trade. Sharath, let's start with you.
Nifty heavyweight Reliance has come out with its numbers, and largely the mixed set of numbers have been coming in. The revenue was in line, margins below, and even PAT coming below estimates. The Jio's ARPU levels, that has been a sequential surprise, almost 209 rupees coming in as compared to 206 in the last quarter, giving a growth of almost 1.3% on a sequential basis. Also from Reliance Jio Financial, they have formed a 50-50 joint venture company with Alliance Europe. This is for carrying the reinsurance business in India, and the joint venture company will launch operations post the receipt of statutory and regulatory approvals. This is supportive for the stock. And lastly, JSW Steel also came out with these numbers. Strong positive number, all numbers beating above estimates, and the standalone EBITDA per ton that came at roughly 10,618 rupees per ton versus an estimate of 11,127, but it was still up sequentially almost 21%.
Okay, well, so those are two stocks to watch out for this morning, but we have a lot of other stock-specific action as well. And Shrishti, which stocks are you tracking this morning?
Well, yes, IRCON will actually be in focus today as the company has received orders worth 1113 crores from MMRDA, and this has been awarded a letter of award for the project floated by RBL in a JV. So this is a positive news coming in for IRCON. So this stock will be in focus today, and within the financial name, we have Karur Vaishya Bank, a positive news flow coming in over here as the company has announced that on 24th of July they will actually consider the bonus share issue, and on the back of this particular news flow this stock is going to be in focus. And lastly, IDFC First Bank within the financial space will be in focus as the company has come out with an announcement where they say that the currency investments BV has received the approval of the RBI with respect to the proposed investment of up to 9.99% of the paid up share capital of the bank, and indeed this particular stock will also be in focus today.
All right, thank you, Srishti, for that list. But Varun, now coming to you, you have picked out two banking majors, HDFC Bank and ICICI Bank for us. How is the earnings scorecard looking for them?
Well, so let me start with HDFC Bank because the overall results for HDFC Bank has been mixed. Because if you look at the overall net interest income, that has grown by around 5.4%. We were expecting a growth of around 6%. But if you look at the pre-provisioning operating profit, that has grown by around 49.6%, which is an exceptional growth and better than what we were expecting. Now, this has been aided by the other income that the company got from the HDB financial stake sale, and that's the reason the overall other income saw a jump, and that's the reason the PPOP saw a jump. Whereas the profit has also increased by around 12.2%, and it has come at around 18,155 crores versus our expectation of 17,370 crores. The overall provisioning for the bank, that has gone up by 5.5 times on a YOY basis, and on a quarter-on-quarter basis, it has gone up by around 4.5 times. And this is because that the bank had actually created a floating provision of around 9,000 crores, and because of that the overall provisioning has gone up. Now if you look at the asset quality, that has deteriorated a bit. The overall GNPA numbers that have gone up from 1.33% to 1.4%, and also there is an increase in the overall net NPA numbers. Actually the street was expecting the NPA numbers to decline, but there has been an increase. And if you look at the overall net interest margin, that has declined from 3.46% to 3.35%. Also, the bank has given a special dividend of 5 rupees and a bonus issue of 1:1. Now, keep an eye on ICICI Bank as well, because it has been a good quarter for ICICI Bank. We were expecting single-digit growth, but overall NII, profit and PPOP, that has grown in double-digit. Also, the provisioning has gone up for the bank, but the asset quality has been stable. Gross NPA numbers have been stable at 1.67%. And if you look at the net interest margin, that has come at 4.34%. We were expecting it to come at around 4.2 to 4.3%. Also, if you look at the advances and deposit growth, that has been around 11.5% to around 12.8%, which is as per what we were expecting. But if you look at the whole industry, the overall advances and deposit have grown in single digit, whereas for ICICI Bank, there has been a double digit growth in advances and deposits as well. So it's been an industry leading performance by ICICI Bank.
Okay, Varun, thanks so much for taking us through all of those major banks' earnings. So mixed set from HDFC and good set from ICICI Bank. But Ravinder, coming to you finally, take us through all the stocks that you are keeping on your radar this morning.
Well, yes, Bandhan Bank can be in focus, where company has reported their Q1 FY26 number, and company reported PAT at rupees 372 crore as compared to 1,063 crore on a year-on-year basis, but company's PAT declined by 65% on a year-on basis. And if we talk about asset quality, then Bandhan Bank asset quality also declined. So overall a weak set of number for Bandhan Bank. Apart from this, RBL Bank can be in focus on back of their Q1 earning, where companies reported PAT at rupees 200 crore as compared to 370 crore on a year-on-year basis, which was down by more than 46%. And if we talk about NII, then company's NII also declined by approx 13% on a year-on-year basis. If we talk about provision, then company's provision, company reported provision at rupees 442 crore. So overall a mixed set of number of RBL Bank in Q1 FY26.
All right. Thank you so much, Sharad, Varun, Srishti, and Ravinder for taking us through all the stocks that are likely to buzz in today's trade. Those are all the stocks that we'll be keeping on our radar today. But with that, it's time to take a very short break.
Hi there, welcome back to Market Cafe. Let's take a look at how the Asian markets are panning out this morning. And lots to talk about when it comes to Asia as well, because most importantly, because while the Asian markets are trading mixed, the People's Bank of China has stood pat on its 1-year and 5-year loan prime rates. China has kept its benchmark lending rates steady this morning as the country continues to grapple with weak consumer sentiment and softening growth. Now, the PBOC has held the 1-year loan prime rate at 3% and 5-year at 3.5%. So that's Shanghai doing quite well right now, about a 0.5% uptick coming in on Shanghai. Hang Seng also doing pretty well, a 0.6% uptick coming in on that front. What's not doing well at all, and in fact we'll try and understand more why this knee-jerk reaction in Australia this morning, about 1% lower, is where the Australian markets are trading as we speak. Nikkei also not doing all that well this morning, a 0.2% cut is what we're seeing on Nikkei. Of course, all eyes are also going to be on what the White House does next in terms of the latest developments on the trade front, now that they have reiterated their tariff stance. If you take a look at our implied open, 25,020, merely above the 25,000 mark is where we're expected to open today. Absolutely flat, not much expected, but well, yes, lots of earnings reaction is what the market will be reacting to today. So all eyes are going to be on how our markets pan out, but that's how the Asian markets are trading this morning. But let's get in touch with an expert this morning and try and understand the kind of global macros, the global moves that we've seen. And we have Seth Freeman, Senior Managing Director of Glass Ratner Advisory and Capital Group, joining us this morning. Seth, hi, morning, and pleasure chatting with you. Give us a sense of all the action that we've seen from the global markets last week. Given the kind of tariff announcements we've seen, US is continuing to hold on to the green, but what could be the ripple effect on the rest of the world?
Well, the rest of the world is also seeing inflation, although interest rates, of course, in the EU are much lower than the United States. We're still in unknown territory in terms of where the tariffs are going to end up, and we won't know really until the next couple of weeks on August 1st. Although today the government was saying that August 1st is not a firm date, and of course, countries can continue to negotiate after that.
That's right. What do you think the impact is going to be on the market? So far we have seen the markets have remained largely, we haven't seen any swings as and when the tariff announcements have kept coming, except for the April lows that we touched. Later on, all the other deadlines that we saw, there haven't been huge swings. So what is the expectation going forward for August 1 and the week and in the weeks before that?
Well, there seems to be optimism about earnings in spite of concern about tariffs, and that's obviously what the market is thinking about. It's not clear that the Fed in September is going to lower rates. Maybe if the labor market continues to soften slightly, the Fed might lower rates, and that expectation will help boost the markets. We're also, in the summertime, and volumes are lower, so a shift in the market on a lower volume can have a greater impact on pricing. But we're seeing a lot of layoffs on major companies. For example, Daimler announced it's laying off 2,000 or putting on furlough 2,000 employees out of its 29,000 employees in the Daimler truck division, and that's significant. And I think we're going to continue to see companies retracting where they can.
Right, Seth. Also give us your sense on gold. What are you spotting on this front? And more than gold as well, the dollar index, right? Because the dollar index has been largely under pressure. Slight recovery, if you could call it that, over the last couple of weeks is what we've seen for dollar index. But other than that, it's been taking a beating so far. Any improvement if you're spotting on that front, and your thoughts on gold?
Well, investors will go into gold when the dollar is weak and there's this kind of risk environment. What's more incredible, frankly, is the increase of interest in Bitcoin and how high Bitcoin has become, almost in faster than gold. So we're definitely in a whole new world here.
All right. Thank you, Mr. Freeman. Thank you so much for joining us this morning and helping us decode the global market setup this morning. On that note, we'll let you go. Thank you so much for joining. All right, then let's move on and let's also take a look at some national stories. Now, Prime Minister Modi is soon embarking on a 4-day visit to the United Kingdom and the Maldives from Wednesday to shore up overall bilateral ties and formalize the landmark India-UK free trade deal. Now, he will first travel to the UK on a 2-day trip and then will visit the Maldives. Sumita Karir is joining us today to talk about his visit's agenda.
Absolutely. The Prime Minister is embarking on a two-nation visit. He will first be in the United Kingdom and then he will be visiting the Maldives. In fact, trade deal and Maldives, that's essentially on the agenda. So let's first talk about the Prime Minister's UK leg of the visit, which is to happen from 23rd to 24th of July. Remember, this visit is happening at the invitation of UK PM Keir Starmer. Of course, the most important highlight of this visit is likely to be the signing of the India-UK FTA. And of course, there's going to be a discussion on trade ties. Remember, to our viewers, we just told last week that there's going to be a signing of the FTA, which was finalized, or rather, which concluded in May this year. Legal scrubbing of the FTA is currently underway. But once signed, it will not immediately come into effect. It will need to be approved and ratified by the British Parliament and India's cabinet. But overall, there's an elimination of tariffs on 99% of Indian tariff lines, and of course, elimination of tariffs on 90% of UK tariff lines. And of course, this is keeping in mind the vision that both the countries have for doubling bilateral trade by 2030. In the United Kingdom, the Prime Minister is also expected to meet with King Charles III. And of course, talking about the second leg of his visit to Maldives between 25th and 26th July. This is, remember, his third visit to Maldives in these past few years. And the Prime Minister is expected to be the guest of honor at the 60th anniversary of the Independence Day celebrations. In fact, Maldives' overall visit is an agenda, given the fact that India-Maldives ties, they hit a rough patch over India out and boycott Maldives campaign, then later on from India. But after that, there was a truce between both the sides. And of course, India then also agreed to increase the lines of credit, and an outlay of Maldives of 600 crores. And of course, currency swap facility was also brought in. But of course, trade is going to be on the agenda. Extension of UPI digital payments, tourism, all of that is going to be in focus.
Okay, Sumita, thanks for all of those details. But hi, morning. While you're with us, we understand the Indian team, which was in the US for trade deal negotiations, is on its way back to India. That's what we're learning from sources. Sumita, what are your sources telling us in terms of what could have been discussed, if anything has been finalized?
Yes, in fact, this is what we shared with our viewers on July 19th. So the team should already be in India. Remember, this team was led by India's chief negotiator, Rajesh Agarwal, who was in the United States for the fifth round of negotiations with the United States. So the fifth round of negotiations has come to a close. In fact, this is coming in ahead of the August 1st deadline that Donald Trump had given to countries for finalizing of trade deals, or else tariffs would come into effect. Remember, these rounds have been going on for a while. Teams from both sides have been visiting each other's countries, twice at least from India now, and of course twice from the United States for this visit. And of course, the MEA also stated last Thursday, if you remember, that negotiations between India and the United States are underway to iron out pending issues for the trade deal. Meanwhile, sources also suggest that the main theme of this deal is all about preferential market access. That's what the government source told ET Now, and preferential market access with respect to their respective businesses. Now, Donald Trump has hinted at access with respect to his deals with other countries as well. Market access has been a big theme for him. He's stated in context of India as well that we're going to have access into India. You have to understand we have no access to any of these countries when he was speaking about Indonesia. And then he spoke about India, stating that we're getting access because of what we're doing with tariffs. But remember, this preferential access is not just for the United States. It's for India as well with respect to other countries.
Okay. All right. Thank you so much, Sumita, for taking us through the latest that we are picking up on the US-India trade deal. But moving on, now the government could mull increasing the capex target this fiscal in order to spur demand in manufacturing activity in the country. Prakash Priyadarshi now joins us for this with this exclusive detail.
The government seems to be a bit about the decent pace of capital expenditure in the current financial year, and therefore Finance Ministry is looking for new growth drivers of the economy. In fact, sources are indicating that the overall capital expenditure target may increase to as per demand in the economy in the current financial year. In fact, discussion has been initiated with various ministries to assess potential capacity. Sources tell us that the Finance Ministry is evaluating capex growth with various departments and ministries such as railways, road transport and highways, ports and shipbuilding have been growth drivers for capex, and that could be expanded to new segment like urban infrastructure as well. So that's an important development coming in. Sources have confirmed that the maintaining current pace of government-led spending and achieving higher growth would be a priority for the government at this point of time.
All right, then moving on, let's shift focus to another story. Now, all eyes are now on the Monsoon Session of Parliament, which is scheduled to begin today. The session is likely to be a stormy one as government is expected to hold discussions on Operation Sindoor, and in all likelihood, opposition will corner the Modi government over Trump's claims of mediating a ceasefire between India and Pakistan. Meanwhile, the government is also expected to include 8 new bills. Let's get back Prakash Priyadarshi with all the details.
Yes, sir. The monsoon session of Parliament is likely to be stormy amid multiple developments. However, government may hold discussion on Operation Sindoor, but the opposition parties are livid. They have been demanding a special session to discuss Operation Sindoor, which was turned down by the government, and therefore they'll seek Prime Minister's statement on the US President Trump's claim on ceasefire. That would be very interesting to see as to how government will manage the flow. Coming on to important bills which have been listed for the monsoon session, the Taxation Laws Amendment Bill 2025, which has been listed to make sweeping changes in the existing laws. Along with that, the Jan Vishwas Amendment of Provision Bill, the Indian Institute of Management Amendment Bill 2025 are part of the agenda. MMDR Amendment Bill 2025, which has been listed to make further reforms in the mining sector. Along with that, the National Anti-Doping Amendment Bill and the National Sports Governance Bill have also been mentioned in the agenda. However, the Insurance Amendment Bill has not been listed so far, but the government has also listed 7 pending bills for the monsoon session, and that may provide big boost to shipping sector as 3 pending shipping bills may get clearance from the Parliament.
Hi there, welcome back to ET. Now you're watching Market Cafe with me, Kanishka Sarkar. Well, let's shift focus to some earnings then. Now, Reliance Industries posted a mixed set of Q1 numbers with retail segment lagging, but brokerages remain positive. Let's go to Sharat to get us a take on what the brokerages are making of Q1 numbers for RIL.
Mixed reactions coming from brokerages when it comes to Reliance. And first, we're having Macquarie. They have maintained outperformance with the target price of 1500. Geo numbers were robust, and the retail growth, however, was lacking. The Q1 earnings beat estimates, and this is coming off a one-off from the investment gains from the stake sale in Asian Paints. Geo was strong, retail was lackluster, and the OTC segment itself was gradually recovering. Morgan Stanley on Reliance Industries, they maintain an overweight with a target price of 16.17. There was a miss in both retail revenue growth and the refining fuel business, but overall the guidance has been optimistic with a plan to double earnings by 2029. Also, New Energy, Telecom and balance sheet were the bright spots in the overall earnings. From the domestic broking houses, Motilal Oswal, they have reiterated their buy rating, but the target price has increased a bit from 1685 to 1700, and overall they have reduced their FY26-27 EBITDA guidance by 1 to 2% and PAT by 4% each due to broad-based earnings cut. Now they're building in a CAGR of roughly 11% in EBITDA and PAT over the next 3 odd years. Nuvama, on the other hand, they have maintained buy rating, target price coming in at 1767, and they have been bullish on the new energy ecosystem. They expect to ramp up in this segment in the next 4 to 6 odd quarters, which will be the largest multi-decadal growth driver. Now they're also expecting a fully integrated 10 gigawatt polysilicon module facility, and lastly, the petchem expansion is on track for FY27, and 50% rise in US ethanol imports may lift the margins as well.
All right, thank you so much, Sharad, for joining us and taking us through the RIL fine print and also what brokerages are making of it. But shifting focus to some banking names now. Now, it turned out to be a steady quarter for HDFC Bank. NII rose over 5% compared to the last year, but came slightly below expectations. Meanwhile, PP, OP and PAT, they came in higher than what the street was penciling in. So let's go to Varun to take us through the fine print. All right, then we'll get Varun in just a bit. But before that, let's take a look at what the management of HDFC Bank had to say about its Q1 numbers.
The fee income has got a seasonality. The Q4 is typically quite strong in seasonality, particularly from a third-party distribution fees. Normally, the season for insurance is quite high in the country around the January to March time period, and then it starts to pick up after the first quarter. So first quarter is low, and this year first quarter has been similarly in line with the past trends low. Yeah, there is seasonality to that.
All right. Also, you mentioned about cost of funds. Your yield on assets have also come down. I just wanted to understand that this cost of funds is something which has come down after a long time. Overall, how do you see them throughout the year, if you can give some kind of guidance?
Okay. See, the cost of funds has come down about by 10 basis points or so in this quarter. The yield on loans has come down, call it about 20-22 basis points this quarter. You know that there are market benchmark loans which are there, which is the floating rate loans, and these floating rate loans reprice faster than the cost of funds pricing. And so that is why you are seeing that there is a lead effect coming from yield going down. So it has to stabilize. So from here where it goes, it has to stabilize. The rate has to stabilize. You saw one more rate reduction of 50 basis points from RBI in June. And so that has to factor in fully yet. It is not fully factored in yet in the asset yields. So over the next quarter, it will factor in. And the cost of funds is a managed cost of funds, as you know, that our bank and other banks determine and offer savings rate and time deposit rate appropriately. We competitively price these deposits, and the market has not fully priced in the reduction of the policy rates, which is 100 basis points down from February to June. The cost of funds or the deposit rates have not factored in yet fully the 100 basis points. And once that comes in, then you'll have to wait and see based on the renewal tenors and the new bookings that happen comes in at the lower rate. So there is a path for it, and the path will be a few quarters out.
Just one last question on corporate and other advances. Corporate and wholesale. That book is showing a muted growth. I want to get a guidance on that front. How is the on-ground situation looking like?
Yes, which is very similar to what we talked last time, which is the larger corporates are quite liquid, highly rated, and pretty strong on their balance sheet, which means the yield that one could get from that is lower. And we have seen competition from certain segments of the financial system where the rates are pretty low. They offer very low rates. And so consequently, while we like the quality, we have been selective in offering and waiting for the rates, that is at least the rates that the banks are offering to larger corporates to be stable. And even in this quarter, we have seen while the credit spreads widened by anywhere between 10 to 15 basis points, depending on a AA or a AAA, the loan yields continue to come down. So it's something that we manage on a close relationship basis with corporates to participate not just on a lending as a value proposition, but overall relationships which is non-fund based as well as the employee and the SME segment, distribution and supply chain segment. So for holistic relationships is where we participate in those kind of.
All right, so that was the HDFC Bank management on how its Q1 numbers were and what it expects for the rest of the year. But moving on to another banking major now, ICICI Bank, that posted a strong set of numbers for the quarter gone by. PAT, NII and PPOP all managed to overshoot expectations. In fact, loan growth and deposit numbers, they came in line with estimates. Moreover, asset quality remained stable as well. Varun, healthy set of numbers coming for ICICI Bank?
So it was a healthy growth for ICICI Bank, wherein the overall growth was in double digit, and especially the advances and deposit growth, whereas it has been in single digit for the industry as a whole, it has been in double digit for ICICI Bank. And there are several brokerage houses who have actually raised their targets. Motilal Oswal, Nuvama, Nomura, Goldman Sachs, all of them have raised the target on ICICI Bank. Nuvama, they have a target of 1670, and they say this bank is expected to post a beat in NIM so far, and again going ahead, it would be one of the most preferred bank in the overall banking space, and they expect the asset quality to remain solid going ahead as well. Also, Motilal Oswal has a buy call with a price target of 1670. It is a preferred pick in the overall sector. They say in this challenging environment also, ICICI Bank has posted a very good set of number, and hence they have a buy call on this stock. So majority of the brokerage houses have actually gone ahead and raised the target on ICICI Bank after strong set of results.
That's right. So most brokerages have raised their target prices on ICICI Bank after a strong set of Q1 numbers. But my colleague Ankur Mishra, he also interacted with the management of ICICI Bank. Let's go across and listen in.
The movement in the net interest income from Q4 to Q1 was primarily due to repricing of loans linked to external benchmarks, which was according to actions which RBI has taken. Some interest reversals on account of NPA seasonal additions in Kisan credit cards, which normally happens in the first and third quarter, and offset by reduction in deposit rates both on the savings and domestic, from savings and term deposits. We do expect the NIMs to sort of compress a little more in the next quarter. After that, we will see how it goes. It depends on RBI's actions, overall liquidity, and if you know from a long-term perspective, NIM was around at 4% before the commencement of the rate hike cycle, which happened in FY22. And then they moved all the way up to 4.5, and before they are declining to the current levels of 4.3. So from our perspective, NIM is one of the levers that we have, and we will continue to focus on maximizing risk-calibrated profit by using various levers, and of course, NIM is one of the levers that we talk about.
All right. Also, I just wanted to understand regarding your home loan growth particularly, do you think this is more scalable in the coming quarters, or you think this kind of momentum will continue?
No, it's difficult to talk about, momentum in the future. Our focus is, wherever the cash flow is happening within the larger economy, we would like to maximize our opportunities by giving seamless delivery to our customers. We will try to look at all cash flows, and in mortgages we have grown by about 10%. I think this is the place I think we called out that we would like to specifically focus on, and it's a secure book, it's a long-term book, and from delivering a 360 relationships to a customer, it is an important part of our portfolio, and we will remain focused on this.
All right, that was the management of ICICI Bank on the way forward for the lender. But on that note, it's a wrap on this edition of Market Cafe. We'll see you tomorrow, but don't go anywhere as the market is up next, taking all the action forward.